Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome to the show, everybody. I'm your host, Greg Tilley.
Greg Tilley.
Greg Tilley. We must say, though, before getting on the air, Greg went to shoot properties this week. He went because we were listing a lot of homes, and he went and shot some properties, and their guy's like, "You're doing the photography? Aren't you the host of the Real Estate and Mortgage Show? You're the Greg Tilley."
Yeah. The new host of the Real Estate and Mortgage Show.
And you know what? Before we start, I do want to apologize. I listened back to the show last week, and I realized that I wasn't on my A game, and I was trying to realize why, and I know why. Well, no, I know why. It was because it was my first week back with Frank, and I still had a lot of disappointment that he was back and stuff like that.
Intimidating.
But now that I'm used to him being back, I'm back. I'm on my A game now. That I've just the whole week I've thought about it, and I'm like, just accept it. He's not going away again for a while.
All right, I'm back, and I'm going to start with a rant.
All right. Here we go.
Frank, the floor is yours.
Whoever runs traffic control on the Queensway, please step aside and let somebody else do it. It is insane how our major thoroughfare in our city is shut down to 2 lanes in the core of the city, and somehow you leave the on-ramps open leading into it. Why would you want more traffic on the Queensway if you're already shutting it down?
And not to boot, the parkway still closed for the bikers, for the cyclists.
And that's fine. I mean, that happens all summer, whatever. We've accepted that, and maybe they shouldn't do it during situations like this, but
that's what I mean.
It is crazy that the Queensway, and if you're coming from the West End, ladies and gentlemen, don't get on the Queensway. It's going to stop at probably Maitland or Woodruff, and it will take you probably 45 minutes to an hour to get through the core of the city. It's not worth it. Put it off until next week, because this whole weekend, apparently. Yeah. Just stay home. It's just not worth it. It's so aggravating. You could see how frustrated people are behind it. But I'm watching all these cars get on at Maitland, Carling Avenue, Parkdale. It's like, why are you leaving the on-ramps open if you've already got it shut down? At least let the cars that are on the Queensway get through.
Welcome to the construction show.
There's my rant.
It's our morning traffic report on the Real Estate and Mortgage Show.
There we go.
And listen, I have a feeling we're going to have rants about mortgage rules and real estate as well. So.
There may be.
But that's who we are. You know what? We say it like it is. We don't sugarcoat anything.
I can tell you, though, the real estate industry, as I put my glasses on, hold on one second, I got to take these off. We saw some decent numbers come out for the month of September, which is awesome. You know, our number of sales were up 2.4% from September of last year. We're still seeing new listings and active listings up quite a bit, 19.3 and 19.4%, which, if you're a buyer, congratulations. Like, there's tons of inventory in the market, which is amazing. And we did see our average sale price go up 0.3%. So it is creeping up a little bit. And if we look at year to date, our number of sales are up 3.9%. And our new listings are up 10.4, active listings up 16.3, which once again is a lot. So congratulations for buyers. Here's a stat that probably people will not even understand is what percentage of homes that get listed actually sell? What do you guys think the number is?
50%. And that might be high, maybe.
You know what? You're smoking right on. It's 50%.
Wow. I would have guessed higher, actually. But
But a lot of people, I remember being in a room one time with a bunch of realtors years and years and years ago, and a guy comes in from Florida, and he's doing a special training, and he's like, what percentage of homes that hit the market actually sell? And everyone in the room was like, 78%, 82%, 99%. And I'm in the back of the room, I'm like, 42%. Everyone looked back like, who's that idiot? The answer was 42%. So right now, if you think your home is selling and you think you can list with just about anybody, think again. Only half the homes that hit the market actually sell. Now, our average sale price has gone up 2.7%. Year over year. But now, if we look back over the last 4 months, our average sale price was $704,000. Then it went down to $702,000, then $700,000, and now we're $699 and change. So we've seen a little bit of a letdown on the average sale price. But I'm telling you, I'm still feeling the start of October. I know we're 4 days in. I mean, we're already at 31 deals in the first 4 days of October, and I'm feeling some optimism. I mean, you know, usually September, kids go back to school, everyone's back in their sports, things are going back to normal. By the middle of the month, it starts booming. Didn't see a lot of that in September. It felt very sluggish.
It started slowly for sure, but man, it ended strong. Man. Well, I'll tell you, from my point of view, I ended up shooting 15 additional properties this September over last September.
Which is a lot.
Because
you shoot how many a month usually?
What did I end up shooting last month? I shot 62 last month.
So we listed 62 homes last month, and you shot 15 more. So wow,
yeah,
that's
I've already shot 15 for October. So we got a ton coming up.
That's
good,
for sure.
I mean,
That's
it's
really
great.
good.
It's great to have the listings, but like I said, if you're a buyer, I mean, you just said 62 properties alone. Just our team hit the market. Well, guess what? There's 4,000 agents in the city. How many other homes are hitting the market? So,
well, not as many. I mean, as you say all the time. I mean, what 80-20 rule, where 20% of agents are listing 80% of the homes anyway.
It's probably 90-10 to be
I
honest.
was just going to say the exact same thing.
Yeah, it's probably 90-10. I mean, don't get me wrong. There's lots of super agents in the city, super realtors in the city for sure.
Definitely.
But we're definitely taking our unfair share of listings, I would say. But saying that, just looking at the market, what's going on, what happened in September, what's starting off in October, where we are year to date. Listen, I mean, we talked about it before the show. I have some realtors who joined my team, within the last 5 years that are like, wow, this market's tough. I'm like, no, it's not tough. This is what we call a normal market. We got, if you were a seller over the last, going through those crazy COVID, if you're a seller, it was really unfair. If you were a buyer, it was also really unfair. Whereas right now, if you do the right things as a seller, you get the professional photography, you get the marketing plan in place, you get your house looking great, and most importantly, you price it properly, you're laughing as a seller. But also as a buyer, you have lots of opportunity out there because there's lots of overpriced listings out there, but there's also lots of listings out there. So there's lots of choices, which is amazing for a buyer as well. So for the first time in a long time, it's hard to say. Usually there's a market that's better for buyers and better for sellers. And I know a balanced market is good for both.
Yeah.
We're definitely in a balanced market. And I can tell you right now that it's good for both. Because if you do the right things as a seller, you're laughing. As a buyer, lots of opportunity out there. So it's a great market for both sellers and buyers right now.
Hey, Paul, can I ask you a quick question on the, you said the average price has come down, but that could that be a reflection of maybe some of the higher price homes are not selling? So therefore, people shouldn't be worried about the fact that, my house value is going down, because isn't it true that it's the average, right? So if none of the $1.5, $2 million homes are selling, then that average price obviously gets reflected.
Absolutely. And we usually see it starts lowest in January and it starts picking up all the way up until we get up to June. And usually after June, we start to see a little bit of softening in the prices going down a little bit, only because we have vacation time in July and August. Then kids are back to school and people are slowly getting back into the market. We'll get a little uptick in October, maybe start of November, and then we'll start to see a seasonal slowdown with snow and Christmas and holidays and all that kind of stuff. So we're still in a strong market. But when I say the average sale price has gone from $704 to $699, it's actually $699.9, so it's pretty much $700. So okay, so we've dropped, let's say $4,000, a little over $4,000 in the last 4 months of the average sale price. That is nothing. That is literally nothing.
It's normal.
It's totally normal. I mean, keep in mind at the start of January, I can't remember. I don't have the January numbers in front of me, but I think we started like $660, $670 at the end of the month as our average sale price. So we're still at $700. So we're still in a great market. Like I said, great market for buyers, great market for sellers. It's a market now where realtors really earn their money when they're listing properties because they have to do the right things. They have to. If you're a realtor and you're not using professional photography, shame on you. and if you're
that ship sailed like
15 years ago. Yeah.
What do you mean? I see TV commercials with people doing iPhones doing movies now. What do you mean?
Well, the thing is, listen, is my iPhone a really good iPhone that I could probably take decent pictures? But I'm not qualified to take decent pictures. It's not my job. I mean, Greg, you're bordering like 45,000 homes you've been into over your career. Yeah. You've probably shot a few more homes than I have with my iPhone.
Well, that's it. You put an iPhone in Steven Spielberg's hands, and you'll probably get something pretty awesome out of it because he knows what he's doing. Yeah, right. And
But listen, I stay in my lane. I know what I'm good at. I know what I suck at. Photos are probably things I suck at. Right. So.
It's when you ask that question about how many houses that are listed sell and the numbers at 50%. I have to tell you, my guess was higher than that. I would have guessed into the 60-70% range.
Most do, but that's actually high.
But only in our brokerage in the last couple of weeks, I've noticed we've had agents list properties and they sell in the first week, What I'm realizing is they've got them priced exactly right.
And it's not the pricing all, it's the marketing plan, it's the pricing, it's the photography, it's setting it up for success. You know, sure, we can go into a house and someone says, I want the house on the market tomorrow. Well, guess what? I haven't worked on my marketing plan, my advertising, I haven't got the photography done properly. So I'm going to hurt you if I do that. But if you give me time to get all this pre-listing and pre-marketing and all that stuff done, get Greg through the door, sprucing up pictures, making things look great, you're going to have some major success. You really will. Now, I know we have to go to a break, but before we go to the break, Frank, on the other side of the break, I want to ask you a question about, well, I'll ask the question now and then you can answer it on the other side of the break. I'm seeing a lot of people now who are calling me and they're like, Paul, I hear you and Frank talk on the radio that, come 2026 and 2027, when people's mortgages are renewing, they're coming off 1.69, 1.79, 1.89, and now they're going into a high 3, a low 4. My payment's going to double. And I want you to sort of explain to people, and I think Sherry did a good job a couple weeks ago, but explain to people that don't panic. Your payment is not doubling.
Correct.
521-TALK, 521-8255. We'll be right back. I almost forgot. Welcome back, everybody. I almost forgot. If you have a question and you want to get it in and you're not able to call in for whatever reason, just go to realestateandmortgageshow.com and you could submit your question there and we'll read them out on air for sure. And get that answered for you.
Well, can I get one question answered for me, the one I just answered?
Yeah, great question.
So Frank, so I'm coming off a 1.89. I'm going to get into like a 4. Definitely my payments are doubling, right?
Well, they're not. Then actually, give you an example. A couple came in to see me yesterday, and they were nervous. They came in. They said, "Oh, Frank, like we bought our first house 5 years ago, outside the city a little bit. They paid $210,000 for their house, and today it's worth closer to $400,000. They put about $20,000 into it. So again, they benefited from the COVID craziness that happened, but they were at 1.64. So their $210,000 mortgage, more or less, with 5% down by the time you had the default insurance, was just under $210,000, is now down to $165,000. So of course they're worried about their payment going up. Now they've accrued some personal debt from a standpoint of doing some of the work around the house and having to buy a new car. So what we did is we sat down and we took all the debt, we put it together because they've got lots of equity in this home now. And lo and behold, doesn't their payment work out to the exact same thing, within $100 a month of what they're paying right now?
With the rates doubling.
With the rates doubling, because now they're in the 4s instead of 1.64. But they no longer have a car loan. They no longer have that personal debt because that's all been added to the mortgage. So again, if you're in that scenario, you don't need to panic. But let's just turn it around a little bit and say, let's say you don't have any other debt. Now, just your mortgage coming up for maturity, you're at 1.64, now all of a sudden you're going to be at 399, 409. What's going to happen to your payment? Depending on the amount of your mortgage, but don't expect it to be doubled. It's probably going to go up 10, 15% from where you're at now. So, and keep in mind, if you had a mortgage of 1.64, you knocked off an awful lot of principal from your mortgage.
And that's what people
period.
And you just talked about this one with this people who had a small mortgage. What about if you had a $400,000 or $500,000 mortgage? You've knocked off a ton.
A ton off your mortgage because probably 80% of that payment was going towards principal. Where now you're going to see that renewal, it might be closer to 50-50. But at the end of the day, that's why your payment isn't going up that much, because instead of more going towards the principal, there's going to be more going towards interest as the interest rate goes up. So that's the difference.
So I think one thing I want to clarify is we have talked about, yes, when mortgages come up for renewal in 2026 and 2027, yes, your rates are probably doubling, if not a little bit more, but your rates are doubling. But I think what people forget is what Frank just said. You've knocked off a ton of money off that mortgage because you're coming off a 1.6, 1.7, 1.8.
So much extra equity in that property.
So much equity. So yes, the rate's going to be higher, but your payment necessarily. And Sherry did a great job a few weeks ago when she was on the show, and she actually had a live example just like Frank did, where the people were like panicked. It was a larger mortgage, and they're panicked because they thought their payment was going to go from $1,400, $1,500, $1,600, $1,700 a month to $3,400, $3,800 or something. And she showed them that their payment went up. I think her example was like $120 a month. Now, not to slight $120 a month is a lot of money for people who are living paycheck to paycheck, but it's $120. It's not $620, right? And I think a lot of people think they're coming off these mortgage renewals and their payment's going to go from, $2,000 to $4,000, and it's just not. So don't panic if you're coming up for renewal on your mortgage.
You're right, but the struggle for a lot of people is, if you've accrued debt outside your mortgage, that means you're barely making ends meet and you're having to rely on outside credit. So again, if you bought your house 5 years ago, or if you've owned your house beyond the 5 years, and the amount of equity that you've built in the last 5 years is tremendous. So therefore, you've got an opportunity to knock off. And I know that people say they don't want to increase the amount of time on their mortgage, but you have to still survive. And listen, carrying outside debt doesn't make a lot of sense.
Well, what's that unsecured debt at?
Could be 10, 15, 20, 25%.
Right.
So
bringing that down to 4% is going to save you.
Amazing. And in many cases, you can keep the payments virtually the same and knock off all that debt so that, if that's what you're doing, all of a sudden now you're eliminating having to pay that unsecured debt on a monthly basis. The goal is to be able to structure your mortgage in a way so that you don't have to rely on outside debt. There's enough money coming in that it'll pay your mortgage payment, and then whatever else you're doing throughout the month, you'll be able to afford with your paycheck, as opposed to having to fall back into the trap of having to use lines of credits or credit cards. Well, that's the goal.
And if your credit card's getting out of hand, and most of these credit cards are anywhere from 19.9 to 23.9.
I think 19.9 is a good.
Is a good one, I know. But if you're someone who's living off credit cards and you have a chance to refinance and suck that money back into your mortgage at a 4% rather than a 20%. I mean, that's a no-brainer.
The banks don't do it. Well, the banks don't want to do a good job. Listen, the banks are very profitable on the credit card debt. So are they enticed to say to you, hey, you have a mortgage of $250,000 and your house is worth $500,000. Why don't we take that $30,000 in credit cards? That should be no questions asked. But here's how the banks penalize people now. If we just do it as a straight renewal, you get this awesome rate. But the minute you add $10,000 or $20,000 to the mortgage, they charge you a premium to do that. And I'm saying, well, wait a second. You're lending out more. You should be able to do it at a better rate, the fact that you're lending out more. But no, the way they're looking at it is we're losing some of the profit on that credit card money. So maybe we should make it up on the mortgage and not give such a good rate on the mortgage. And to me, it's criminal what's going on right now. It doesn't make any sense. A straight renewal, a bank will give you a rate of 3.99, but the minute that you're refinancing and adding something to it, the rate goes to 4.29. So they're charging you a premium to change it from just a straight renewal, and they say it's all the work you do. But, well, isn't that what you're supposed to do? Like, isn't that what you pay employees for?
But you're moving unsecured debt into a very secure. But they make less. They make less, but it's more secure.
Okay, Greg.
Right.
Which part are you
getting about the bank? They're a bank. They don't care.
They're about making money, not saving money for the client. They're about making as much profit. That's why they're under so much scrutiny. You go into a branch and they're upselling you on things you don't need. Buy this insurance, buy that. You have no idea how many times I get phone calls. Hey, you want some credit card insurance in case you lose your job? I'm self-employed. I'm not going to lose my job. So why would I buy this insurance? But it's crazy the way they get you. And, it's X amount per $100 that you owe. And it's insane. If you look at what you're paying for that insurance, it's absolutely criminal, the amount of money that they're making on it. That's why they put so much resources into selling insurance, into selling credit card insurance, life insurance, disability, because it's an extremely profitable product for them.
That's where they're making their money.
Of course, and credit cards, and it's incredible. Unsecured debt, that's where they make their money, where they charge you $10.99.
Yeah, where lines of credit at?
On a loan, they're charging you $10.99 when you've got $300,000 worth of equity in your home. Why wouldn't you just do it the other way around? And no, because the first thing is to profit. Again, they get compensated in the branch based on profit that they bring to the bank. So that's the difference.
But Frank, unless you listen to this show, you don't understand this, right? That's the beauty of it. Education.
Well, I've been disappointed. So 3 clients called me this week and they got the renewals from the bank. And I said, well, the banks are pretty good on renewals. And all 3 of them said, well, they're offering me like a 5-year at 6.35. And I said, what?
What?
They sent you a renewal agreement with the posted rate and no discounted rate? Yeah, I don't see any discounted rate. I said, that's absolutely absurd. So you need to call your branch. So I'm going to find out next week, and I'll report again next week. I said, you need to call your branch and say, is this the rate you're offering me? Because if that's the case, then don't even bother contacting me anymore. I'm going to go elsewhere.
But Frank, how many people sign that? I'd love to know that number. Would you say 10% sign that?
I'll tell you who signed it. Somebody that thinks that maybe they lost their job or they've had some credit issues. So now they think they don't have any alternatives. A little tip that I give people is that, listen, if something has happened to your credit because you've gone through a situation where you've lost your job temporarily and you missed some payments, so you're right. You now have lost your competitive edge to go somewhere else. But doesn't mean you've lost your competitive edge with the current institution that you're with. So do not allow them to take advantage of you. Say to them, listen, it's okay to lie to them because they'll lie to you. So it's okay to play both sides. Say to them, listen, I went to another bank and they want me to move all my business over. So they're going to give me a competitive rate. So unless you sharpen your pencil, I'm going to move my mortgage elsewhere. It's okay to do that to a bank and let them come back to you with a competitive offer. Do not get taken advantage of. And at the very least, if you feel like you are, call a mortgage broker, call a mortgage agent, get a second opinion. Do not trust your bank all the time because, again, most times, unfortunately, there's some really good bank employees out there, but they are taught to do what's right for the bank and not necessarily what's right for you.
And if you have a question, give us a call, 521-TALK, 521-8255. We'll be right back. Welcome back to the show, everybody. We apologize. There seems to be a little bit of a problem at the transmitter level. So if you're hearing some static on air, that's not Frank snoring through the show. That's a little bit of a technical issue on our end, which is being looked at as we speak.
Awesome.
All right.
So you sent me a text last night that I thought was absolutely brilliant. It came from a gentleman by the name of Chris. So there's not my words. It came from a gentleman by the name of Chris Smith. Looks like he's a keynote speaker, an author, whether he's in real estate or mortgages, I'm not sure, but is the actual text itself was, I thought it was just the face of a text that says, this is your biggest financial transaction ever, and you're comparing agents based on who charges the least. Bold strategy, Karen. and then when you click on it, which I thought was brilliant, he goes on to explain, which is so true. And let me just read it quickly because I thought it was great. You interviewed 5 agents to save 0.5% on commission. Meanwhile, you're about to hand over a $650,000 asset to them. You spent 3 hours comparing commission rates. You spent 3 minutes checking if they actually sell homes. You picked the cheapest one the same way you pick brain surgeons, right? Here's what that 0.5 savings actually costs. The discount agent who lists 47 days longer than average, that's $3,847 in extra mortgage payments, $842 in utilities, plus the $27,000 price reduction you'll take when the buyers smell desperation. The agent who does this on the side missed the multiple offer situation because they are at their real job. You lost $35,000 to the cash offer that came in while they were in a meeting. Just list it high and we'll see what happens, agent. Congrats, you're now overpriced. You're now the overpriced comp every other agent uses to sell their client's house. Look, honey, this one's been on the market for 127 days. We could get it for way under asking. Plot twist, the best agents often charge more and net you more because they know the things like Thursday's listings get you 7% more. Professional photos adds $19,000. Pricing $10K under market creates a bidding war that nets $30K over. But sure, save the $3,000 in commission. The $50,000 you're going to leave on the table should more than make up for it. This is your retirement fund, your kids' college money, your entire net worth in one transaction, and you're shopping for agents like it's Black Friday at Walmart. Let me know how that works out for you. When I read that,
that's a real estate agent. That's definitely not a mortgage broker.
Well, yeah, he might be, but I don't think he's a real estate agent. But he's a keynote speaker and an author and all that stuff. And do you know any more about who this guy is?
Oh, I looked it up earlier. I can't quite remember, but I'll pull it up.
But I just thought
we'll give him a proper shout out.
But it is brilliant. Like, I think it's absolutely brilliant the way he worded all that. And like I said, when people start to complain, Paul said this on the radio. I'm just reading someone else's post, which I thought was hilarious and I thought was very real, though, very real. So. Anyways, saying that, Frank, there was some news this week with some of the strange crap that OSFI's doing. Like, what's going on with this?
Oh, we have to be nice to them, Paul. We want them to do what we want.
Yeah, but still.
The interesting things OSFI is.
Yeah, the interesting things they're doing, things that could hurt many Canadians if they want to build some wealth in real estate.
Yeah, so OSFI, Office Superintendent of Financial Institutions for the Province of Ontario, is a separate regulator. Let's call a spade a spade. Listen, they're the ones that came out with the stress test in 2016, 2017, and there was some concern over it, but overall it's done its job. Do a lot of us think, and not only in the mortgage industry, the lending industry, but also Canadians in general think that maybe it's a little bit crazy that when rates were elevated, that not only did they have to qualify at that rate, but you add 2 percentage points on top of that. So to qualify at 2% higher, Yeah, there were Canadians that said that doesn't seem like a fair system. Like, why are we being penalized? Why do we have to qualify when rates are elevated? It made sense during COVID when rates were at 164, but back then we had a qualifying rate. The qualifying rate is, nobody talks about it anymore. I think it's still at 5.25%, but nobody talks about it because there is no 3.25% or less mortgage, so we're not using that rate. We're using the 2. So I think there's some arguments where our industry has said, just get a qualifying rate and just use that. Never mind the +2, the plus whatever it is. Just go with the qualifying rate. But now they've doubled down and they've said, or at least they're putting a proposal forward where, if you've used your income, your everyday income to qualify for a house that you're living in, and we've seen many scenarios where, young Canadians want to build wealth through real estate. They're not comfortable with the stock market, the volatility that comes with the stock market,
Crypto,
and everything else that has a high chance of failure. They're very conservative in nature. They're very low risk in nature. They don't want risk. And the stock market, the crypto has a lot of, yes, high return if it works.
Potentially high return,
but also potentially devastation if it doesn't work. So a lot of people, specifically Canadians, Americans are more apt to take more risk, but Canadians generally are low risk.
Well, hold on. Americans are able to take more risk also because their systems are a little bit more entrepreneur friendly and business building
but they walk away with bankruptcies and then they're able to
100%. Yeah.
Like it's just a different system. So, so now what they're proposing is that, if you've used your everyday income to buy a house that you're currently in, and you choose to buy a second home, and in many cases, anybody that bought pre-COVID, if you bought a townhouse pre-COVID or just before the craziness started, you would have gotten the townhouse maybe at $350,000, $400,000.
for sure.
Today it's worth $600,000.
More.
You've paid down the mortgage. You've got some equity. Why not keep it as an investment property and build our wealth that way? So we'll pull some of the equity out, and now we're going to use that equity to buy our next home that we're going to live in. But what OSFI is suggesting is that because you already use that income to qualify for your primary mortgage, your everyday income shouldn't be used now to buy this second home if you're going to keep the first one. And it's like, what? How's that make any sense? So if the issue is that we have a shortage of housing or affordable housing, then deal with that issue. But do not penalize Canadians who are looking to get ahead financially and prepare themselves for retirement and have something for their kids and university funds and have some equity built in by telling them that they can't do what is a very smart way of thinking, which is I trust real estate. I trust the value of real estate. Why wouldn't I want to keep this house, pull a little equity out and buy my next house, and knowing that the rental income on this property will support the mortgage and the taxes and everything else so that I'm cash flow neutral on it. And now we'll do the next thing, which is we're going to buy our house, we're going to live in it, we're going to use our income to pay for the mortgage on that house. But what they're proposing is that you're not allowed to use the income, which would virtually make anybody pretty well impossible for them to be able to buy a second home. So I think it's unfair. I think it hurts Canadians that want to achieve wealth through real estate. And I don't know how it's going to pass. I hope it's not going to pass because I don't think it makes sense.
Well, what it's going to do, it's going to pour money into an investment that is, like, for me, potentially the stock market is great. I have lots of money in the stock market, but I don't need to understand it because I have people who are handling my money. But you never know what's going to happen.
No.
I know what's happening in real estate.
Right.
I know. And I brought this up before coming on the show. The easiest way to build wealth in real estate is, let's say you buy your first home. And then, like you mentioned, maybe you're going to refinance that, or maybe you're going to get your second home and you're going to keep that as a rental property. Then as you pay down the mortgage, you're going to refinance to buy your next rental property. I can show you ways that you don't even have to take money out of your pocket to buy investment properties. I remember years ago, I had so many doors that I had a hard time getting funding, getting a bank to give me a mortgage for another property. And I said, okay, hold on. You see my credit, you see how much money I make in a year. You know that I own all these homes, and some of them I own
You'd owned them for ages.
They're almost paid off. Half these homes were almost paid off. They're like, yeah, sorry, you have too many doors. And I'm like, but look at how much money I have in equity in all these homes. So, I mean, it's easy for me to refinance those homes to buy more properties, but it was so hard for me to get mortgages on more doors. And I was just like, that doesn't make sense. I mean, I can understand if my mortgage was up to, 95% of the value of the home. I mean, yeah, then I'm a bit of a risk, but
for sure.
Some of my mortgages, the houses were worth, 600,000 and I owed 110 on it. Like, where's the risk in that? If I had to sell that property, I had tons of equity. So I love our banking system and the way they run things because we saw what happened in the States. So I love what we're doing here in Canada, but I also hate what we're doing here in Canada. If I want to get wealthy through real estate, and it doesn't look like it's a risk at all, there's all these rules and parameters. If I don't fit into this certain box, it doesn't work for me. And I know a lot of people that are the same way. I mean, they're struggling to get more doors. They have the money. Some people I'm working with right now have $1 million sitting in their bank account. They don't want to put it all in a property, all cash into a property. They'd rather get a mortgage and use their money.
Be able to write it off, right? There's tax benefits in being able to have some interest write off as opposed to paying it all in tax because it's rental income. So,
and use your money, your $1 million in the bank. I mean, you use obviously as a down payment, but then you use it for other things. And but they're like, no, sorry, we can't give you a mortgage on that. So you mean I got to go pay cash for a property? Like, it doesn't make sense to do that.
Yeah.
And so I don't like to say, I mean, like I said, I love our Canadian banking system because it's secure, but I also hate it because it doesn't allow entrepreneurs and risk takers to get ahead, which in my opinion is terrible for Canadians.
It feels like the banks are the ones that are calling these shots because they're trying to minimize their risk. And what's bothering me most about this is the fact that I can understand the tightening in the rules if delinquencies are a problem. But every single default insurer and bank will tell you, yes, has it crept up from, the low of the COVID times when the delinquencies came even more down as people were working from home, having extra cash, so nobody was missing mortgage payments. Have they gone up based on the cost of living over the last 3 years and everything else being so expensive? Sure they have. But we are now at the same level that we were pre-COVID. So therefore, and back then it was considered extremely reasonable. Like the banks and default insurers says, hey, like we're comfortable with this. We're in a comfort zone. So
what are the levels? Like what is the level?
What was
out
the number,
of
Frank?
10,000 mortgage holders, 28.
So hold on,
arrears.
not 28%.
No.
28 total.
28 total people. So 0.28 of 1%. That's what the delinquencies are on the mortgage industry in our country.
So why are we tightening rules? Why aren't we loosening rules?
That's the questions that we ask. As an industry, we ask this. Like, wait a second, it's already too tight. Listen, I'm already upset at the fact that what we put clients through to prove their down payment because of money laundering rules, and all the banks and lenders and real estate agents are going through it too. We want to make sure there's no money laundering. We're asking hardworking Canadians who do nothing but write things. They move their money from the TFSA account to their bank account where they write the check to the lawyer. They move money, and we have to provide them with 90 days of statements, all this paperwork to show that these hardworking Canadians did it legitimately and didn't. 0.1% of Canadians are guilty of money laundering. 0.1%. But the other 99.9% get treated like they're criminals sometimes. Like it's embarrassing for us to have to call them. We need that statement now. It's like, what do you mean? I moved the money, it says, from RSP while we need 90-day statements on the RSP on the RSPs. The other thing we complain about, wait a second, if the money got into the bank, so let's say TD, CIBC, Royal Bank, wherever that money got in, isn't it that bank's responsibility to make sure that that money was in there legally and not laundered? Why do we have to take it to the next level and the level after that to find out whether they laundered the money? Why do so many people have to get involved in good, hardworking Canadians who all they're doing is they've sold their car and they put the money in there, and all of a sudden it's not money laundering? So I think that's what upsets our industry right now.
Because you guys have FinTrack too, right?
Of course we do.
So you FinTrack, we FinTrack.
Yes.
I'm assuming the lawyers FinTrack.
You know what doesn't FinTrack? The banks, when the money gets in there. It's like it just goes in there and nobody checks it. It's insane what's going on right now in our industry. It really is.
Have a question? Go to realestateandmortgageshow.com and submit it there, or give us a call, 521-TALK, 521-8255. We'll be right back. Welcome back to the show. Hey, we've got a call. Bob's called in from Ottawa. Bob, welcome to the show.
Good morning, Bob.
Bob,
you there?
We
We hear Bob. You there, Bob?
I am here.
You have a question, Bob. Go ahead.
Well, I wanted to make a brief comment on that little diatribe that you read a few minutes ago about about people choosing a realtor, a broker, and you're going to be doing one that was discounted, and all this, and both part-timers.
Sure.
I wanted to share a little bit of experience that my wife and I have had in 49 years of home ownership, having bought and sold 15 different properties.
For sure.
We have run into, the last half of our career in buying real estate, some incredibly bad experiences with agents.
Okay.
And the first home we bought was in 1976. We were just newly married. I had no clue what we were doing. We had a real estate agent. Now this is a piece of property that was sold for $20,500.
Wow.
We had no idea what was going on, and our real estate was a fellow that seemed ancient at the time. He was probably in his mid-50s.
Careful, Bob.
So
Careful.
You know what you just said about Frank, right?
I told you you're old, Paul.
Yeah.
And I'm at the end of being 60 right now. The end of being in my 60s, so I can relate. But
Wise.
This fellow, he helped us get the mortgage. Went to the bank with us. He helped us get it was a country property. Took us all about getting getting water samples and all the stuff that we needed to qualify, about making an offer, because we had no clue, none whatsoever. We were very young. And he walked us all through the whole process and made sure our backsides were covered with all the conditions that we had to put in offers and whatnot, making sure that we were properly taken care of. And it was a tremendous experience. He made sure we were well taken care of. And then fast forward several years to a situation where we would be looking at property in a different town or different municipality, and asking the real estate agent, and no gender specifics need to be said here, asking the agent, well, what about how would we go about getting could we build a garage here or a shed or something? And the answer was, I don't know, call the municipality, call the city. Oh, well, can you do this? Can we do this here? Can we do that here? Is that possible? Can we put a basement apartment in? Call the municipality. Call this, call that. Now, all they were interested in doing was basically getting an offer on paper. No, nothing else beyond that. No help with anything. We had an agent one time who when we were selling a property, and it had sat for a little while, and then we got an offer on it, and he refused to do a sign back on it. It was 35,000 under asking. And he said, "Oh, I think you should take it."
So, Bob, just because this is a 1-hour show, let me just interject and say, okay. So your question is basically, yes, there are some riffraff and there are some great agents out there, is what your point is, correct?
Well, yeah, and our experience has been that the quality of service in this industry has gone in the toilet in the last I'm going to say 20 years.
Well, I'll tell you what. The real estate board did a really.
Hey, wait a second.
Yeah.
Wait a second. Hang on. You want to listen to me or not? I mean, I'm calling in to make a point.
I know, but we only have another 3 minutes
There's
left.
only 3 more minutes left in the show, Bob.
Go ahead, Bob. Go ahead.
I'll let you go. I'm sorry to
No, just call in another segment that we have more time. Unfortunately, you called in the last segment where we have much less time.
Right.
Okay. Whatever. Thanks.
Thanks for your call, Bob.
Okay.
No, and I think what he's saying is that's I think that, but the world is like that. I find like you're getting less and paying more for a lot of things in the world today, and there's also legal ramifications when you're talking about real estate agents. The legal ramifications weren't the same 40 years ago, 50 years ago as they are today. Even on listings, a real estate agent can't put the exact square footage for the case. In a case where a real estate agent could put it's 2,220 square feet, and then the customer measures it and it's 2,180, and all of a sudden now they can sue and say, wait a second, you gave me bad information.
And I think where Bob's going with this too is that he believes that the industry has gone downhill. Now, I will tell you there's more agents in the industry now, but I will say the real estate board's done an amazing job with changing the course. I mean, I used to complain all the time early in our real estate radio career here how the bars of entry were way too low. To get into real estate, the bars of entry were way too low. the bars of entry are no longer low.
And that's just changed in the last 4 or 5 years.
Yes,
right, Paul?
I have agents who have gone through the course, and it's tough. Like, to get into real estate now is tough, and it should be tough because you're dealing with people's biggest assets. The only downfall is, I can only speak what happens in my company. When you're done that real estate course, I still don't believe you're 100% equipped to sell real estate.
No, that's when the real training begins.
That's where the real training begins. And with lots of other companies, you search out training and they have wonderful training. All I can talk about with my company is you don't sell a home until you pass everything by me. You have to know how to list a home properly, negotiate property. You have to know everything about our company, all our platforms. You have to know how to deal with clients. You have to know all that. And that could be, for a new agent, 2 to 3 months of training process.
Easily.
That's where the real training comes in. And I think if you leave it up to agents to search out more training, that's where the problem lies. And I think that there's lots of companies that do a great job of training and provide a lot of training for agents. But unless you're searching it out and doing it, you need to get that done, because once you get that course, awesome. But then you have to really learn how to be a real estate agent. And I think the real estate board's done a wonderful job increasing how it is to get into this industry and the education level. So, but I understand Bob's, but just like every
frustration. But Bob is right.
Yes.
Bob is right. There are a lot of real estate agents out there that just care about their commission. All they want to do is sell you this house. They want everything to go through quickly without a lot of, drama, no stress. They don't want to answer questions, because either they don't know the answer, or they'll say, "Well, legally I can't answer that. You can ask a community. Go call the city if you want to build something. That's not on me."
But but that's how you have to get more educated. You should be able to say, "Listen, I believe this. It's not my area of expertise. Let's search out someone who it is their expertise.
I'll help you figure it out.
Figure it out. That's what you should do." And
which
listen,
doesn't happen a lot.
No, it doesn't. And there's lots of industries that have lots of challenges. And I just believe that it's great that the bars of entry are much higher, and I think real estate agents are much more educated. And there's lots of phenomenal realtors out there. But so I can't comment on Bob's. Like, I'm not going to comment on the real estate industry. I still think we're a wonderful profession with lots of great.
But I think we get the gist of Bob's frustration.
I do,
where the service levels have come way down compared to what he was accustomed to 50, 60 years ago.
Absolutely. All right. Speaking of which, we gotta go. But birthdays, Frank?
Yeah, just a couple. Leela Rose, our assistant manager and our sales support, celebrated her birthday this week, and Kim Powell Steele, an agent that's been with us for a long time, celebrating her birthday. So happy birthday to Kim.
Amazing. Just want to remind people, and Greg, you're probably going to do it at the end, realestateandmortgageshow.com. If you want any questions answered on the show and you don't want to come on the show, or you can't come on the show, or you're nervous to call into the show, ask your questions there, realestateandmortgageshow.com.
Yeah, we didn't get to Mike's, by the way. He sent one last week, but we'll answer it next
Mike,
week.
we'll get to you next week. Have a great week, everybody.
Have a great week. Support local business and charities, everyone.